Hello and welcome to 80 Now. You're watching IPO Central and my company in focus today is Jinkushal Industries. The IPO is opening on September 25th, closes on 29th, price between 115 to 121 rupees per share. It's a total issue of 116.1 crores. The company is into export trading of construction machines to global markets. And joining me today is Abhinav Jain, who is the promoter and director, and Sumit Kumar, who is the CFO. Gentlemen, thank you very much for joining us on ET Now. To begin with, Abhinav, give me a sense of your business model because it seems that you are entirely export driven.
Yes, thanks a lot, Mr. Sujit. We'd like to extend very warm thanks from the entire company of ours. I'd like to give a few comments. From a Raipur, Chhattisgarh-based family business today, Jinkushal Industries is a global multinational powerhouse, and we are a 99% export-driven company. We're in the niche business of exports of used construction machines, refurbished construction machines, new customized construction machines, and recently we have launched our own brand by the name of Hexcel of construction machines. So that's pretty much what we do.
Also, give me a sense of when you say that you are into export trading of construction machines, how is that? How does this model work? Do you take directly from the OEMs and supply to global markets, or do you have a facility which also refurbishes or sells second-hand machines to global markets?
Correct. So that's an excellent question. So the whole entirety of global used construction market is quite big. It's, as per carriage reports, it's about $132 billion in 2024, expected to grow with 6.0% CAGR to 177 or something odd billion dollars in 2029. That's about 10 lakh crores to about 16 lakh crores. That's a pretty big number. So what is happening over here in this industry is that we buy second-hand machines from this exact market size that I just told you, and we refurbish them in our designated and owned refurbishment state-of-the-art facility in Raipur, Chhattisgarh. And we have other partner refurbishment centers as well, just like how 3PL players rent out warehouses, etc. in other places. We rent out workshops and refurbishment centers in other places to make our operations efficient and scalable. So we buy used construction machines, we refurbish them in one of these centers, and then we have a good B2B customer base segment all across the world, across more than 35 countries. And we export to them as and when, the orders get executed.
My sense is that from the RHP that you do a maximum export to Mexico. Is that a geographical risk for you in that sense?
Well, I believe all the risk factors have been adequately disclosed in the RHP, but I would like to add on that in financial year 2022-2023, we were about 30% of our revenue to this particular country of Mexico. But over the years, as we grew in our business, as our vintage grew as well, as our experience and expertise grew, we took a strategic call that we are getting better margins in Mexico as a particular country. And we started shifting our export revenue to that particular country to add on to our bottom line ultimately. And we are a Marwadi Jain family, so we really focus very much on the bottom lines, and that's what drives us. So we took a strategic call, and from 30 to 70-75% of our export revenues are being coming from Mexico now. And there's a very good reason for that, because of the fact that the bottom lines are being contributed from that country. We, however, have exports in Europe, including UK, Netherlands, Belgium, these countries, and there are other countries that add to our export kitty as well, including Australia, some part of South Africa, Canada, Dubai, of course. So that's pretty much it.
Which are the segments that you cater to in terms of verticals there? Any particular vertical that you cater to?
So we cater mostly to the B2B side of the ecosystem, and whoever are our customers are primarily B2B wholesalers, importers and distributors or dealers in those particular countries who already have an experience and to import used or new construction machines, assemble them, put them back together, and then provide the last mile endpoint distribution or sales service. And then they are able to cater to their regional customers as well. look after their pain points, any small things come up or whatever, and the same time zone, etc. So those are primarily our customer base. However, we do supply to end users and contractors as well on the retail segment of it. So, but the largest and lion's share of the revenue comes from B2B customers all across the world.
Give me a sense of how this market is growing, because 75%, nearly 75% of your exports or total sales is now coming from Mexico, and then followed by UAE and Netherlands. How is this market growing, and what is the kind of margins which is there? Because I will come to Sumit also on the margins front, but how's the growth in this segment from there? And given the recent trade wars which are going on, do you see that Mexico may be putting in some kind of higher duties on India as well?
Well, as I pointed out to the fact that earlier, we are a very PAT-driven company. Honestly, मतलब घर में बात भी होती तो it's just that कि भाई other numbers are backward-looking numbers, whatever, we don't care. Father, grandfather, everyone is just कि भाई ultimately पैसा घर में कितना आ रहा है, right? So we just care about that. And on a limited capital base, we have to understand the size of a company, the working capital involved in this heavy working capital cycle business was a particular pie, I would say, so far, right? So in that particular pie, सबसे ज़्यादा पैसा wherever we can earn from, the maximum amount of revenue, we just focus on that. So earlier we were 45% to Europe, so Netherlands exactly, around 8% to Belgium, around another 8 to 10% to UK. But these are countries which have a transit time from Bombay to, let's say, Europe of about 20-25 days, at 30 days at max, right? And then Mexico is a country where the transit time is 60 to 90 days. So this involves a heavy working capital for this business, but obviously it gives a much larger PAT level on an overall basis. So in our new construction machines, we get about new customized construction machines that we tailor make for our customers. That's about 2 to 4% on a PAT level basis. On used and refurbished machines, that's about 12 to 14% on an annualized PAT level basis on used refurbished machines. And we've recently launched our own brand as well, in which it's early on, it's first year of launching and operations, but we're expecting about 12 to 15% more or less on PAT level basis on that vertical as well. So, but the essential point is that these margins are very much obviously coming because of our strategic decisions taken about which charity to sell in. And farther away, by basic common sense and logic, that whenever you invest larger amount of capital for more amount of time, you get more return on investment or more profits on any particular product or business model. So as you said that we are not selling only to one country, so the geographical risks are pretty much mitigated because we already have vintage and history of selling about 50-60% of our revenues to Europe, Middle East, etc. earlier. And if at all, whenever the time comes, we can always shift back to that region again. But for now, there's nothing that's stopping at all. India is at a very good sweet spot globally currently. The world is looking towards India. The demand is growing. Indian engineering expertise is recognized and understood globally. And they really value the, I'm a mechanical engineer, my father's a mechanical engineer. So when we go out and speak to people, they understand what we do, what kind of expertise do we have. They really value that. So I don't think India and products and shipments from India are going to be hampered by any policies as such, because the demand is still there. As I told you, it's a 10 lakh crores market already in 2024, growing with 6.0% CAGR. So the demand will be there, the Indian supply is there, the engineering expertise and the global power that India has become is there. So I don't really see anything else stopping. And if and when time comes, we already have diversification where we have sold so much, we can really explore those avenues again.
Sumit, can you come in on the margins also? 6.14% in FY25, it's fallen from FY24. Any particular reasons why they have fallen, and how do you manage the currency risk given the fact that there's a 60 to 90 days delivery time which Abhinav spoke about? So, how do you manage that risk as well?
Yeah, hi. So yes, about the margins and the profitability ratios, if we compare the 2-year figures, we have grown from 4% to 5% marginally. So, and turnover has been doubled itself. So yeah, we are growing with a very fast speed in the turnover side, and margins are also pretty good. There is no such risk in that. And for the currency risk, we do the forward contract hedging, so our risks are hedged in that way.
If at all there is a risk of tariff that comes in from from Mexico or so, is it possible for you to pass on the entire hike to your distributors and wholesalers who are selling your product in that country?
So I would like to take that question forward in the aspect that, first of all, there are about 200 countries in the world, right? Each and every country needs roads. Each and every country has potholes in their roads. Each and every country needs to build buildings and bridges and whatnot, right? And all of these things, and even they have to mine or whatever. So all of these things need construction machines. So the demand is there. Doesn't matter if, you know, whatever government policy or geopolitical decisions are taken, the demand will be there. So as and when the time comes, and other than that, I believe other than one country in the world, there is no other country in the world who is really using tariffs or other things as part of their foreign policy or decision making. So, and our revenue share to that country is in the lower single digit numbers, right? So we don't really see any other country currently putting tariffs or anything else. On the contrary, all the other countries and one particular country in the world are actually clubbing together, growing together, meeting together each other to really form strategies and collaborate more and more to, you know, strengthen their relationships amongst each other rather than that one particular country. So on the contrary, we see a very positive side. Mexico, as you have been telling, is a very large economy. It's a top 10 economy in the world almost in the terms of GDP. It's more than a $1 trillion economy. It's pretty stable politically. Consequence, governments have been there year on year, you know, completing their entire terms. So it's in a very good shape. It's a very big mining country. So we really don't see that something like that is going to happen very soon. And there have been no reports as such, as I can, to the best of my knowledge, that I can recall, something like that may be happening as well.
Okay. What about your working capital requirement, Sumit? You need working capital requirement, and if I look at your numbers, you know, your working capital requirements for FY27 is coming to somewhere around 211 crores. So are you generating enough cash flows from your operations to take care of that, or you will have to come back to the market to raise further funds for your working capital?
So yeah, most of the IPO funds are going to the working capital requirements of our company. So this is the strategic call to how to grow our business. But currently we don't see any cash crunch in our company. We have good accruals and IPO funds are coming in. So we have pretty good numbers of working capital to work for the next couple of years. So going forward, we will see how the market moves and how our revenues growth are there. Then we will decide on how to take up that cash requirements also.
Gentlemen, it was a pleasure talking to you today. Thank you very much for joining us on ET Now. Your IPO is opening on 25th of this month, 115 to 121 rupees. It's a 116.1 crores IPO, and the company is valued at little over 464 crores at the upper end of the price band. Thank you very much for joining us today on ET Now.